Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. And if you want to make it more fantastic, smash up that like button. All right, guys, USD in collapse mode. We've been covering this for days. We look specifically at the top on the 26th of September, saying the media had gotten out of control. It was wild across social media. You had huge influencers, people that like to banter a lot, talking about the collapse in economies and currencies at the exact top. It is wild how often it happens time and time again. So that's why you're here, because we see through all of this nonsense news, and I hope you're seeing that now for yourself. Take it away, take that information, go and learn it, and just improve your own investing and trading, because it's basically a simple strategy that anyone can use, especially us in retail, where we can do the opposite to what the media is telling us at almost the exact right time. All right, so that's USD. Bitcoin has broken the bear market downtrend. So what does that mean for Bitcoin and cryptocurrencies in the short term and within this bear market? That's what we want to cover in today's video. So make sure you are subscribed with the bell notification icon. Click all so you can tell YouTube that you want to see more of this content and less of the other nonsense that continues to get the timing wrong. Now, of course, I want to stay a little bit humble here. We're not always 100% right, but I do my absolute best to show you what I'm thinking, why I'm thinking it, so that you can take it away and make it your own, so you can improve your own trading and investing as well. All right, enough of my rambles at the beginning here. USD cool off or collapse. Like I said earlier, the 26 was the big call here, and I put it on my Twitter as well. News headlines: DX, USD booming, GBP, so the Great British Pound is collapsing, the Euro's collapsing. At the time, the pound was going into some very tough times. Obviously, the Queen has passed. Their retirement funds, their superannuations for us here in Australia, the same terms, are basically looking like they're insolvent, but they will essentially maybe turn on those money printers and start to help out the economy again. The euro collapsing, we saw all of these significantly huge headlines. Now, does that mean that we are out of this complete drop in the USD and we continue further? Of course not, but we are starting to see some of those short-term signs whereby the moves to the downside are starting to increase compared to all of the moves previously. Look at all the little moves to the downside here. So use this swing tool, Gann swing indicator. The weekly has also started to move down and break past particular resistance points here. The 50% came in at 111 for the Dixie, and that has now broken. So we look a little further to the downside to the next support levels at around 107.6 to the top here at 109. So if we start to continue dropping from that point, the next measure we're looking for is for the market to overbalance in price and time to the downside here, 4.6. So if we move this to the top here, the next critical level is very, very close here, which means that the market would have gone further in price should it break down past 109. So we're only about a point off that now, and that would almost start to put the swing in favor of the bears over the bulls for the daily to the weekly time frame. So that now starts to give you a bit of an idea of how long the market, in this case the dollar, might hang out at these levels and start to form a base for higher moves, or start to look to move down, meaning that this trend overall could be over. But remember, what we've looked at previously is the time that some of these markets can remain at the tops, even if the trend has basically run out of steam. The major one I like to use here, because it lines up with our 18.6-year cycle, the mid-cycle slowdown before the US dollar began to lose a lot of steam, is this area back in 2000, 2001, 2002. So this is our real estate cycle, which we're marrying into the currencies, the stocks, and of course cryptocurrencies as well. The 18.6-year cycle is still bang on track. Talk about that later. This is the move here. We're looking at about 65 bars. So it's about 2 years at the top here, even though the market did have a solid correction from this peak of 118, 119, all the way down to 108. It tried again. It made another move up, but of course this move is much shorter and the next move is shorter, and it begins to look like that top in Bitcoin before Bitcoin rolled over. So it's a very similar sort of pattern where the bulls start to lose steam, but it can take a lot longer in these markets compared to altcoins or Bitcoin, of course. So keep a lookout for that. This could be the start of one of these moves. It can take weeks, of course, and the overall top we could be around these top areas for many, many months to come, but we don't see too much more move to the upside. There is resistance at around 118 points, which is the 50% level of the entire range. So keep that one in mind as well for the USD. But overall, we do have the beginning of a cool off, which could lead to further downside. The areas to target that I'm watching as targets for support are approximately 107 for a round number, the 107, 108. If you're not following me on Twitter, I suggest you do. I don't post that much because I don't want to fill your feeds with a whole lot of spam and noise, which essentially is what social media has turned into. But for me, I just like to post 1 or 2 significant things per day. That's the way I'm feeling at the moment, because this stuff basically holds true for days to come. And you can start to see some of those invalidation points or points where it is validated. In this case, obviously, we're still going on with the currencies because this has then led into Bitcoin and the rise in Bitcoin at the moment for the breaking of the bear market downtrend. And of course, the stock markets as well. They've gone on the bounce, which is what we specifically looked at in yesterday's video here, that buy signal, and they bounced from that point. Look, I don't always get it this spot on, or the timing works out so quickly, but more often than not, that's what we aim to do. So remaining humble here, it does take some practice. It takes a bit of time. Moving on to the pound, just as another example for how clean and easy TA can be. Of course, you still hear a lot of people say it can't work, but basically looking at here, we got the most extreme panic was at the low, the 26. This is now confirmed that we have a medium-term low. We might break this in the future, but this is pretty well showing that we're getting a pretty big bounce out of this point. It's confirmed now. We are 1, 2, 3, 4, 5, 6, potentially into our 7th day up from that low. And should this break down over the coming months, this was a significant low, especially around the panic that we saw on that day to say that the pound is over, it's going to go to parity, below parity, etc., etc. The euro, similar sort of thing here, but hasn't bounced back as strong. It's getting closer towards parity again. So it just seems like the panic has subsided. The news doesn't have so much to talk about when it comes to the US dollar collapsing other currencies. Now we're starting to see the bounce back. In terms of stocks, we saw the stock market bounce and break through that entry point. It was the swing tops here and the previous support levels. So we throw in our swing indicator again to give us a clearer picture. Look at this swing bottom, swing bottom, swing bottom, a couple of swing tops, and the market basically just jumped and bounced straight through that. So that's for some strength there in the short term, because we've seen the dollar drop as well. And the news is basically trying to scramble to figure out why this is happening, what's going on. Gold's up, silver's up, the other currencies are up, but the US dollar's down. This is moving because that's moving, etc., etc. But if we're just following the chart, we were looking at this days earlier or weeks earlier, and all of the signals are here. We've talked about that on the channel as well. I'm not trying to toot our own horn here, but you guys, you like TA, you follow TA, and you can see the benefit in it before the news happens. And that's essentially the biggest point I'm trying to make here is TA helps you see what potentially will happen before the news tells you what's already happened. Now, this leads us into commodities. And of course, with the US dollar falling, that is now giving some leeway and some relief to commodities. You can just see how well the 50% levels are working here for oil. They work on all markets, of course. $78, we got a bounce here for oil. And remember, another reminder, the huge news back in March of this year, if you've forgotten, oil was going to go to $200. We had this big pump up this 1 week here in late February into early March. Market reversed, tried another attempt at that high. It failed. And of course, we had to see further downside because of the failure to reach that next higher price, meaning supply came into the market. There was not as much demand. Therefore, prices have to go down. It's that simple. Now we're seeing some support come in at the 50% level. We've had a small bounce. And of course, this is timed out relatively well with the US dollar. It's funny how these timings tend to work out over and over and over again. So we'll look for some support here and see whether oil can start to regain some strength. And you can see the 50% at about $100, a nice round number as well. And oil just goes down as another example of how the news got it so wrong at the exact peaks. That leads us to Bitcoin, what we're all here for. This is the bear market downtrend break finally happened. I've got about 30 minutes left until the market closes. I dare say we will close above the bear market downtrend. The levels still remain intact, and I want to look at some time frames for how long this could take for the market to basically establish more support above this level. Even if the market goes down, remember it is a down sloping trend, it can go up and then, yes, up and down. I know I just said that, but it can go down and stay above the bear market downtrend and how much time that takes. So the two levels still remain here, $20,700 for some resistance, and then 21.4, same deal with this current top, 22.8. We haven't seen such a hugely strong move yet, which leads me to believe we might get a little bit of resistance coming up. I posted about this just yesterday. Historical Bitcoin cycle buy zones have shown up the last two cycles, and we've touched into it on this third cycle. We didn't get the massive pump up that we were looking at for the last two cycles. You know, the market was expecting big pumps like the previous cycles. So maybe this down leg doesn't give you those huge 85 to 95% drops like the past. Maybe we get an 80% drop, which still drops us back into this zone. We're now currently out of the cycle buy zone, something I talk about on the channel. So the biggest thing for me at this point is controlling the emotions. That is what I think is going to be a big issue for a lot of people. Should Bitcoin start to rally, this chart's going to show it a little better, should Bitcoin start to rally up to 21, 22, 23,000, overall it's still within a trading zone here of 17 to 25. So what happens is the emotions start to take over, the Bitcoin will rally, people have missed out buying underneath 20, and just the psychological change between 19.5 and 22.5 is crazy. And it's only 10, 15%, but the psychological problems, you think you're going to miss out and never going to see lower prices. That leads to that FOMO to the upside. Maybe we get higher breaks. Let's see what happens from that point. And it becomes a game of managing emotions from that point. This is a chart that I posted yesterday on Twitter talking about the historical buy zones, and a few comments were saying, no, the market has to go lower. It must go lower. X and Y, Z's happening at the Fed, etc., etc. This sort of news, that sort of news. This time is different. Blows my mind how people are still thinking that this time is different. There's no such thing as this time is different. The markets rhyme. They don't have to be exactly the same, but the cycles repeat over and over and over again. You study it long enough, you'll start to see the patterns. So we're joining up the monthly tops here, giving us a bit of a time frame, a road map. Doesn't necessarily mean it has to be exactly like this, but just to let us know that even though we get a break of the bear market downtrend, maybe we still have some time left before we really start to see more accumulation and breakouts. So going back to the previous cycle here, in 2018, there was about 100 days from the breakout point to the low in December. And then we had about 220 days before it broke out of the accumulation zone and started to move higher into that first peak of 2019. And of course, from history, we know we had the Black Swan event here, and it took another 500 days for this next low to come in, 560 days. And then the market started to move up from that point. So I'm not trying to cause any sort of FOMO here that the market has to take off from this point just because it's broken the bear market downtrend, but it does just mean that we are coming that next step closer to the end of the cycle. I'm going to be talking about that for months to come because you can see that it can take 100 days to get to the next low, another couple of 100 days to break out of that zone, another 500 days before it hits a second low, a higher low, and then the market moves on from that point. And the market will repeat like we've talked about, but it doesn't have to look exactly the same as the previous cycle. So look back to this other cycle when the market broke out of the monthly swing tops for the bear market downtrend. You can see it was about 200 days to that low, and then to the next low was about 400 days, and to the breakout was about 480. So call it 500 days. And from that point, we didn't see another significant drop into a accumulation zone, but the timing was about 200 to the bottom, 400 to the next bottom. So it still had two bottoms here, one there in August, one in January, and then a breakout. 200, 400, 500 days. The previous cycle here was 100, 200 to a breakout, 600 to the next low point. So there can still be a fair bit of time. And if we just work with the shortest time frames here, maybe it's a break, and within 100 days from where we currently are, we get into that next low point as well. And from that low point, 100 days takes us from currently here, 100 days is about into January. And if we went to 200 days, 200 days is going to be about April. So we could be looking somewhere Q1 for another low if this is not the final low. But if this is the final low, maybe we have a second higher low coming up towards the end of the year, sometime in Q1 as well. I'm not trying to invoke any sort of FOMO here, provided you got your plan and you know what you want to do next. If this happens or that happens, you're going to be fine. There is still time in the market. Maybe we don't see a 17K Bitcoin again, but it's not that far off the lows, which is why I look at a cycle buy zone and chip away at Bitcoin in those prices. And finally, the main thing to always look out for is those news headlines that continue to call market turns in the exact opposite of what they are trying to say. And that goes for a ton of social media. Not everyone, but a ton of social media, especially those that really cater towards retail markets looking for crazy big headlines. That stuff is all noise, of course, my opinion, not having a go at anyone, but I want to make money in these markets and I hope you do too. If you do, smash up the likes, subscribe, bell notification icon, all those things down below. Let YouTube know you want to see more of this and less of that. There'll be some videos popping up on the left-hand side. Go and check those videos out right now to learn more about trading cryptocurrencies and investing in Bitcoin and cryptos longer term. Thanks once again, guys. Until next time, peace out.